Jerome Powell really rocked the market as he suggested that the interest rate cut that everybody's counting on in December isn't a done deal. The Dow Jones 30 suddenly looks like it's ready to fall, and forming two shooting stars in a row is a good sign that's about to happen. I'll be watching 47,000 for support. FOMC throws markets into chaos. This is Chris from Hola Prime taking a look at your technical roundup for Wednesday. And as you can see, we have seen the gold market rally a bit during the trading session on Wednesday to break above the $4,000 level, only to turn around and break down. The market breaking down the way it has suggests that, of course, we are going to continue to struggle, and I think this is something worth paying attention to because the 50-day EMA underneath near the $3,845 level, I think being broken to the downside opens up the possibility of an attack on $3,800, which was the target based on the ascending triangle. If we break down below there, then we probably go back down towards the $3,500 level. Jerome Powell really rocked the market as he suggested that the interest rate cut that everybody's counting on in December isn't a done deal. And that really threw a spanner into the situation. Ultimately, I think this is a market that was overdone, and now it's starting to look really fragile. There are plenty of geopolitical reasons for gold to go higher. Central banks supposedly are still accumulating gold, but that's a little bit of a misnomer. Some of the charts you see don't take into account that the percentage of reserves rising isn't what they're buying. It's the fact that it's worth more. So we'll have to wait and see how that plays out. But really at this point in time, I think you have to be very cautious. The best case scenario in this environment is that gold goes sideways for a while and works off some of this excess froth. I've been saying that for a moment now, and we'll have to see whether or not that actually ends up being the case. Silver initially fell, rallied significantly to reach the $48.42 level, only to turn around and show signs of weakness. At this point, I think we're just hovering around the $47 level. It is possible that maybe we hang out here, but if we give up the bottom of the candlestick from the Tuesday session, the market drops pretty significantly down to the $42 level, possibly down to the $40 level. Ultimately, this is a market that I think the best case scenario is that we go sideways, just like in gold. But really, at this point, I am definitely more comfortable owning gold than silver because silver is not a precious metal. And of course, it has a lot of industrial usage. And there's a lot of questions out there about the global economy. So with this being the case, sideways is the best case scenario. If we give up that 50-day EMA, I will start shorting aggressively. Full disclosure, I already have puts in the ETF known as SIL. So I'm already betting on it dropping, but it's a fixed bet. It's something that I've got in the equities options market, so I can only lose so much. But if we give this up, I think we really start to fall apart. The euro, of course, fell, and we are hanging around the 1.16 level. The 1.16 level is an area that I think you need to pay close attention to, as it is a large, round, psychologically significant figure, but you also need to keep in mind that the European Central Bank has a significant interest rate decision during the trading session on Thursday. So I do think this ends up being a very volatile market. If we can break down below the 1.1550 level, then I think we start dropping towards the 1.14 level, which has been my thesis for a while, but I also recognize that Thursday could be very noisy, so I would also look at the possibility of any rally as a selling opportunity. I don't know that I would jump into it ahead of the meeting, but I certainly, if I had to pick some type of direction, it would be lower. The British pound has taken a real beating during the session, and if we can break down below the bottom of the candlestick from the session here at the 1.3140 level, I think the bottom falls out. This is an area that's been tested a couple of times already in the past, and it seems to be holding. If we break, then we could be looking at a pretty significant drop, maybe down to the 1.27 level before it's all said and done. The British pound has been taking a beating for a while due to the idea that perhaps the Bank of England is going to have to loosen monetary policy before it's all said and done. And with that, I do prefer selling short-term rallies that show signs of exhaustion, especially near the 200-day EMA, which is at the 1.33 level. The US dollar has rallied significantly during the trading session on Wednesday to break above the 0.80 level. The 0.79 level is an area that I think a lot of people have been paying close attention to as a potential floor. And with that being said, the market could very well continue to hang out in this general vicinity. The 0.79 level is an area that I think you have to watch very carefully. And if we were to break down below the bottom of the candlestick over the last couple of weeks, then you could see an opening to the 0.78 level. Keep in mind, though, the US dollar has been building a base for a while, and after that FOMC press conference, there are a lot of questions as to whether or not the Fed's actually going to cut in December. People were starting to price in 2 and 3 more rate cuts, and now there's some questions. I think we probably continue to go sideways here for a while, but if we can take out the 0.81 level to the upside, then I think the trend will change and we will start to go much higher. I would love to be part of this position. I do buy dips. I do recognize the interest rate differential continues to favor the US dollar. And it's worth noting that even with the quarter point interest rate cut, the bond market doesn't care. Interest rates have barely changed in the United States. And ultimately, that will favor the greenback over the Swiss franc in general. Keep in mind, though, if we start to see some type of volatility out there due to fear, then the Swiss franc could suddenly strengthen, even against the US dollar, even though it's considered to be a safety currency as well. The US dollar initially fell against the Japanese yen, only to turn around and rally quite nicely. And at the end of the day, we find ourselves tangling with the 153 yen level. If we can take out the little micro double top at the 153.25 level, then it's likely that the dollar could go looking to the 154.50 level. Anything above there opens up a move to the 158 yen level. And keep in mind that the interest rate differential continues to favor the greenback overall, as we have an interest rate decision coming out of Friday on Japan. There could be a certain amount of volatility, but really at this point, I just don't see the Japanese being able to tighten monetary policy. And with the election of the new PM, they are likely to adopt a loose monetary policy anyway. Risk appetite increasing could help this pair as well. So we'll just see how that plays out. But 153 yen is obviously an area that is very important. Breaking that, I think, will attract a lot of traders. The US dollar initially fell against the Canadian dollar early in this session as the Bank of Japan, the Bank of Canada, cut rates, but signaled that they weren't ready to start cutting yet as far as increasing the rates. So with that being said, I think you have to look at this through the prism of a market that thought perhaps the Fed was going to cut a couple of times over the next several meetings, only to turn around and bounce from the 200-day EMA, as it looks like the interest rate differential is going to be the same as it was before we started the session. Interesting. So if we can break above the 1.40 level, it opens up a possibility of a move to the 1.41 level. Anything above the 1.41 level then opens up a longer term buy and hold trade to the 1.4250 level. I don't have any interest in shorting this pair because, quite frankly, I don't like the Canadian dollar. But I also recognize that this is a choppy pair under the best of circumstances, so I expect a lot of volatility and a lot of noise in general. That's nothing new for this pair. Just keep in mind that it does tend to grind back and forth. So at this point, you're just collecting the interest rate differential and riding it higher. That's what I've been doing for several months now. And after today, I find myself in the same position, regardless of the volatility. The Australian dollar rallied pretty significantly only to turn around and show signs of exhaustion. The signs of the exhaustion, of course, being a shooting star. If we can break down below the 0.6550 level, then you have a potential breakdown from here that could open up a move to the 200-day EMA. If we break down below the 200-day EMA, then the 0.64 level could be targeted. Keep in mind, this is a pair that is highly sensitive to the U.S.-China trade situation, but at the end of the day, if the Federal Reserve isn't going to be cutting rates drastically, then the U.S. dollar won't be falling drastically. If we were to break above the top of the candlestick towards the 0.6625 level, then the 0.67 level could be targeted. But really at this point, I don't think that is the likeliest of direction. All things being equal, this is a market that I think continues to be more sideways than anything else, with a little bit of a downward tilt to it. The New Zealand dollar initially did rally during the trading session here on Wednesday, but it looks like we are giving back the gains to show hesitation. The 0.5750 level is an area that I think a lot of people be watching, and this is previous resistance, so it should end up being support, and so far that has played out. If we break down below that level, but if we do, then the 0.57 level is a potential target. If we rally at this point in time and break above the 0.58 level, then the 50-day EMA, followed by the 0.5850 level, offers resistance. The New Zealand dollar is not a currency I like at the moment. So the turnaround during the day actually got me short again. We'll just have to wait and see whether or not it breaks down. This is a market that's been in a downtrend for a while, and the New Zealand dollar is actually weaker than the Aussie. So given a choice between the two, I actually short this pair more often. So the euro breaking to the upside is a very bullish sign, as we had cleared the 0.8750 level during the previous session. We gave back about half the gains, and it does suggest that maybe we get a little bit of a pullback, but this pullback for me is going to be a nice buying opportunity. The 0.8750 level is a level in the market that has been important multiple times, and I think the market memory coming into the picture probably ends up being what I would expect. That could be a nice entry in this market, with the 50-day EMA down at the 0.87 level and rising. I think this is more about the British pound than the euro, as the euro, although soft during the session, hasn't been selling off like the pound has. If we can break above the top of that candlestick, then the market might go looking to reach the 0.89 level, which is the measured move from the breakout of this 150 pip range. I think at this point in time, it's all but impossible to short this market. But if we do get a breakdown below that 50-day EMA, then that changes the situation. But right now, that doesn't look very likely. The euro has gone screaming higher against the Swiss franc as we continue to see a drift towards this noise. As we head into the European Central Bank interest rate decision, I think it's very difficult to try to put a lot of money in the market. All things being equal, this is a market that I think will continue to watch the 50-day EMA very closely. The 50-day EMA being broken to the upside perhaps opens up the possibility of the 200-day EMA being targeted near the 0.9350 level. Ultimately, this is a market that had gotten a bit oversold. And when you look at the longer term consolidation, one has to wonder whether or not the Swiss National Bank didn't get involved at one point. After all, this is the pair that they follow the most and are most likely to start getting involved if it gets a little bit ahead of itself. After all, 85% of Swiss exports go into the European Union, so they're very sensitive to how the Swiss franc trades against the euro itself. A pullback at this point is very likely, but we'll have to wait and see what the ECB interest rate decision and press conference ends up being, or more specifically, what it does to the euro in general. I think it will probably move well beyond this pair, but if the euro starts selling off drastically, I expect the Swiss to come in and try to defend the euro against their own currency. The euro has gone back and forth against the Japanese yen during the trading session on Wednesday as the market continues to see a lot of volatility and questions asked about the overall attitude of the risk appetite. If we can break above the 178.50 yen level, then I think the euro continues to go much higher. Short-term pullbacks, I think, are buying opportunities in a market that is extraordinarily strong. The 175 yen level is the top of a gap that I think a lot of people will be watching, with the 50-day EMA sitting underneath there, offering a bit of a floor. Ultimately, this is an environment that will continue to favor the euro, but with the European Central Bank interest rate decision, the market could get very volatile, but I think any knee-jerk reaction to the downside almost certainly will open up value hunting. With this being the case, I like buying the dip. We'll just have to wait and see whether or not we get it. If we break down below the 50-day EMA, then maybe we need to settle down a little bit and bounce before we go higher. The British pound has recovered quite nicely against the Swiss franc during the trading session here on Wednesday. After breaking below the 1.05 level, or at least attempting to during the session and bouncing from it, the question at this point is now, how far do we bounce from here? I think the Swiss National Bank is starting to get a little upset about the strength of the Swiss franc, and I am seeing the same thing across the board. I'm seeing the US dollar, the euro, and the pound rally against the franc. So I think this is an environment that you have to be careful with the franc. And with this being the case, I think you're looking at a market that might be able to be bought, but you'd have to be very cautious with your position size. Recognize that the interest rate differential favors the pound, but this is something that you're going to have to go small and plan on hanging on to for months. If we break down below the bottom of the candlestick and get below 1.05, we could see the pound start to head towards parity. I'm almost positive the Swiss would not appreciate that, and by then probably will have intervened, even though the pound is not their biggest concern out there. Again, it's all about the euro against the Swiss franc. The British pound has fallen pretty significantly against the Japanese yen to test the 50-day EMA, only to turn around and show signs of life. The 50-day EMA sitting just above the 200 yen level, I think, is a nice little area that buyers might be attracted to, as it's a large, round, psychologically significant figure, but perhaps more importantly, it's also an area that previously had been resistance, so we might be looking at a potential setup based on market memory. And on top of that, we also have the nice hammer candlestick from the trading session, so it all starts to line up for a potential bounce from here. The interest rate differential continues to favor Great Britain, and I don't see that changing. Keep in mind, though, there is an interest rate decision coming out of Japan on Friday, so be aware. Knee-jerk reactions are possible, but over the longer term, I would anticipate that eventually the carry trade continues to be something that people favor, as nobody wants to pay money every day to be involved in a trade. If we broke down below the 200 yen level, then I think you're looking at the 198 yen level as a potential floor. We'll just have to wait and see how that plays out. But we've been in an uptrend for quite some time, and I just don't see how that changes anytime soon. I suspect we'll try to get back to the 204 yen level and then eventually threaten that crucial 205 yen level. Anything above there almost certainly gets the attention of, well, most of the market. And in that environment, you probably see the Japanese yen getting hammered by just about everything. It probably has very little to do with the British pound and everything to do with the Japanese yen overall. The Canadian dollar has exploded to the upside against the Swiss franc, but you can see we are kind of struggling here. I think you've got an environment where traders are going to be looking at this as a potential attempt to break out, but the 50-day EMA in the downtrend as well as the 0.5750 level, I think all kind of come together to show signs of hesitation. This is an area that previously had been support. Now it looks like it's trying to offer resistance. This is a market that I think reacted to the Bank of Canada perhaps not looking to get aggressively loose with monetary policy. But at the end of the day, Canada has a whole host of problems. So with this being the case, I look at this as a market that I'm trying to short. I just need the right setup. We'll just have to wait and see how that plays out. If we do break out to the upside, breaking the 0.58 level, then it's possible that we go looking to the 0.59 level, which is pretty much where the 200-day EMA is hanging around. I don't look for that to happen, but it is something that could. We are in the midst of seeing the Swiss franc struggle against multiple currencies, although again, if I'm going to short the franc, it's probably not going to be against the lowly Canadian dollar. The Canadian dollar has rallied significantly against the Japanese yen after initially falling during the day. Again, that doesn't make a huge surprise to me, mainly due to the fact that we have the Bank of Japan out there on Friday who will probably stay loose, but at the same time, the Japanese yen has been hammered by multiple currencies. The Bank of Canada not sounding as dovish as people thought they would be, I think is coming into play here as well. But the 110 yen level being broken to the upside, I believe opens up quite a bit of momentum and perhaps a bigger move just waiting to happen. The euro has been back and forth against the Norwegian krone, right around the 11.61 level. And this is a market that I think if we continue to see a lot of volatility, the 11.55 level is your support level. And the 50-day EMA, currently sitting at the 11.675 level, is your short-term resistance. I think we continue to see a lot of back and forth. The euro fell initially against the Swedish krona, but found the 10.88 level as significant support. With that being said, I think we're just bumping along the bottom of this overall range. Breaking down below the 10.85 level opens up a move down to 10.75. Breaking above this little resistance barrier that we've seen recently at 10.94 opens up an attack on the 50-day EMA and then possibly even the 11.08 level, which is the top of the overall range. The New Zealand dollar has been noisy against the Japanese yen, but again, this is a Japanese yen thing. This is not a New Zealand dollar thing from what I can tell. I look at this through the prism of a market that is trying to sort itself out, and I also recognize that there's a zone of resistance starting at 88, which is basically where we're at, leading up to 89. If we could clear 89, this thing could really get rocking to the upside, but right now it looks like we're just going to continue to dig into this area. Watch the dollar against the yen because that will be the leading indicator in all of the yen-related pairs. The New Zealand dollar rallied against the Swiss franc, but is giving back some of the gains. The 50-day EMA and the downtrend line come into the picture, and I think that opens up the possibility of fading signs of exhaustion if and when we get them. The 0.4650 level being broken to the upside could be a very bullish sign, but right now I think, that's going to be a little difficult. The US dollar has rallied a bit against the Mexican peso, and that makes a certain amount of sense as the markets are whining about the fact that Jerome Powell didn't say there are going to be 6 cuts between now and the end of his tenure. So with that, I think you've got a situation where the US dollar gets a little bit of a knee-jerk reaction. But in this pair, once people start to focus on the fact that the US economy is running fairly strong, they then start to focus on the fact that Mexico is one of the biggest beneficiaries, as Mexico is the largest exporter to the United States. The interest rate differential still favors the Mexican peso, and the technical analysis, of course, still looks at the downtrend line, the 50-day EMA, and the 18.5 level as an area that could be sold into. The market memory in this area, previously being support, does make sense that we would see a bit of resistance in this general vicinity. Oil has been in a very noisy move over the last couple of days, and at this point, short-term rallies continue to be sold into. I think exhaustion is something that's coming into the fray here. With the 50-day EMA sitting right around $61.38, offering a bit of a ceiling right along with the $62 level. This is a market that I think is getting ready to roll over. And the biggest move, quite frankly, had to do with the fact that they announced new Russian sanctions. My answer to that is, who cares? They've been talking about Russian sanctions that they're throwing in the market for the last 3 or 4 years now, and they've made no difference. We still see Russian oil heading to the market, and therefore, oversupply of oil. That continues to be the main problem. I do think we're going lower, but I also recognize it might be a little bit noisy along the way. Nasdaq 100 has been very noisy, and it is positive, but we did get back quite a bit of the gains. I think we got a little extended here. I'd love to see a little bit of a pullback and then a bounce that I can start buying into. Currently, I believe that the 25,000 level is the floor in the market. As it was previous, resistance should now be support. And of course, it's a large, round, psychologically significant figure that traders will react to if and when they see it tested. To the upside, I think we're looking at a move to somewhere around $27,000. The S&P 500 has gone back and forth during the trading session and is actually closing a little bit negative. This is a market that I think probably is due for a little bit of a pullback. We had that massive move after the announcement that China and the United States are actually potentially coming together for a framework. I don't know what that means. But that pullback, I think, opens up big possibilities. Keep in mind that a couple of major stocks are reporting after the bell close, Meta and Google, if I remember correctly. And that'll have a major influence not only here, but in the Nasdaq. But I think a little bit of a pullback really is what the doctor ordered here. The Dow Jones 30 suddenly looks like it's ready to fall, and forming 2 shooting stars in a row is a good sign that's about to happen. I'll be watching 47,000 for support, and I do think that overall this is still a really bullish market. I just think the U.S. equity markets may have gotten a little bit ahead of themselves. They got a little exuberant, and Jerome Powell had to knock them back into orbit. With this, pullback should offer buying opportunities. A day or two of negativity would not be the worst thing for the stock market. We'll just have to wait and see how that plays out. Bitcoin has been all over the place during the session, as you would expect. We're seeing these mass liquidations in the middle of the day, and today was no different. I think this shows a market that's really struggling to find its footing, and this is something that I think you should be watching. Even if you aren't trading Bitcoin, it'll give you an idea as to how risk appetite is behaving. The $108,000 level begins significant support down to the $105,000 level. And the $117,500 level begins significant resistance to the $120,000 level. We are sitting just below the 50-day EMA, but really at this point I don't think that matters. It's somewhat sideways, and this is a market that has been very choppy over the last several months, going back at least 4 months. I think we're just in this wait and see pattern. Playing the range, whatever this range ends up being, might be the way going forward. All things being equal, I think the markets are going to cool off for a minute here, and they really should. Stock markets have been overdone for a while, and I think the US dollar is going to continue its climb in general. Precious metals, we may have seen the top. We'll just have to wait and see, but I certainly wouldn't be jumping in with both feet here. And of course, other currencies like the euro and the Japanese yen will come into focus over the next 24 hours as we get central bank decisions.
Hola Prime, trade with transparency.